Everyone wants to be a millionaire and get rich quick off of a penny stock. But what penny stock do you actually buy is the $1,000,000 question. And could this penny stock that we're talking about today be that next one? What's going on, everyone? My name is Andrew and welcome back to Broke Man Finance, one of the most simple and down-to-earth finance channels on YouTube right now. In today's video, I'm breaking down a penny stock company called CYBL Corporation, or ticker symbol CYBL. And for the sake of time and sheer boredom, I'm going to just cover some brief highlights of this company, kind of give you an idea of what I'm talking about. I'm not going to ramble on because let's be honest, no one wants to hear some guy on YouTube ramble on for 30 minutes about a stock or a company, especially with a southern accent. So let's go right into CYBL. CYBL is trading right now at a crazy high price, stay with me here, 4 cents per share right now, but is up over 23,000% for the year to date. But the truth is, and I truly believe this, they still have a lot more room to grow, if you can believe it. CYBL was founded back in 2000 and since has been a trusted provider of advanced lighting systems and infrastructure systems for the military, the government, and commercial organizations. CYBL's newest investments include advanced technology solutions for unmanned aircraft systems, renewable energy, and high bandwidth infrastructures. Now, if you go to any financial site and type in CYBL and you pull it up, there's obviously not a lot of data or information compared to a Verizon or Virgin Galactic or Tesla. And typically you'll see quarterly reports or SEC filings that they've done or they've posted. And I started reading a couple of those, which can be very, very boring for some people. And there's a couple paragraphs in there that really stood out to me and I liked what I saw. So as of this year, their total revenue is standing at $367,000 for the year. Yes, that's $367,000 and not millions. But here's where the good news comes in. On page 11 in the recent quarterly report, the company is forecasting DoD agency revenue of over $2 million alone in 2021 as the recovery from the pandemic shutdown continues. Their main customers within the DoD is the United States Air Force, Army, and Special Forces Command with the Bright Eye lighting products. In addition, back in 2019, they had set up a South American office in Colombia, and prior to the COVID shutdown, they were anticipating around an additional $3 million in business opportunity due to the solar and power infrastructure projects going on within the region. However, when we look at a company, we have to do our due diligence because they're extremely volatile and they are some negatives. And I'm going to cover two of the main negatives involving CYBL, at least that I see on face value just initially looking at this company. The first issue that I see is they're almost solely dependent on Department of Defense contracts for revenue. If you compare that to a Boeing or a Rolls-Royce, we see that those companies had major issues with the shutdown. Forecasting forward, this could be a weakness for CYBL, is because if they have a main product that the Department of Defense decides they don't like anymore, there's a couple issues, or they move away to a competitor, this is going to cripple or potentially cripple CYBL if they don't have those other products moving forward to make them a little more marketable in the overall lighting industry. So that's the first issue that I see just right out of the gate is they have to be more diverse and attract more customers from maybe the construction and industrial industries to get that market a little wider for them. The second big issue I see is they're only being traded on the OTC market. So you have sites like Webull, Robinhood, a lot of these smaller trading platforms that just don't provide the retail investors the access to be able to invest in this company. So you have to go with your major platforms like TD Ameritrade, Charles Schwab, Vanguard, all these companies that may offer access to the smaller companies. So that is definitely a weakness because they're not able to appease the entire investing market or all the investors in the world to get money into this company and buy those outstanding shares. Of course, the overall warning is this is a penny stock. Obviously, it's being traded at 4 cents a share. Stocks like these really don't get much more volatile, so you have to be very leery. You have to be willing to throw a little money into the pot and hope that it turns up down the road. Of course, we look at technical analysis and stuff to see what it's projected like And I think for me, this is a company that I'm willing to throw $50 to a couple $100 into and get a lot of shares at such a low buy-in price. This is a company that you can focus on the long term, or you can focus on, hey, they're gonna come out with a good announcement and it's gonna jump 20 to 50% overnight, and that whatever that initial value was of investment, I'm gonna grow 20 to 50%. I get out and I focus on the next one. So there's obviously a long-term strategy and a short-term strategy with CYBL. Either way, just be careful before you invest money into this company. Just don't take my advice. Reach out to a certified financial advisor before you decide to spend your hard-earned money into any stock market, regardless if it's a penny stock or a stable stock. Let me know in the comments what you think of the stock. If there's another penny stock that you recommend that you see a lot of potential, I would love to see that and share with our fan base. As always, thanks for watching the video. I hope you stay safe, and we'll see you on the next one. Later.